Hello and welcome to YP Investors Quick Tips. In this video we will be covering market conditions. So first let's navigate to the YP Investors member homepage. And once you log into YP Investors, you're automatically redirected to the member homepage. On this page we display the current market conditions. And currently right now they are bad. So what does this mean? This means that the majority of stocks in the market are going to be going down in price in the long term. Now this doesn't mean that as soon as they switch to bad they're going to just start dropping and dropping consistently down every day. It means that the stock can still go up in price. Some stocks may even continue and go up higher and higher in price during these bad market conditions. But the general population of stocks in the market are probably going to be going down and down the longer that the market stays in this bad condition. So day to day stocks can still go up, they can still increase, but in the long run they'll probably go down. So what can we do in bad market conditions is one of the questions that I always get asked. And what you can do is, some people ask, should I sell out all of my stocks right away as soon as the market switches to bad? And that is an option if you want to be super conservative, but it's not the most intelligent option. What you want to do is, let's go to the stock selector and look at a stock. So I'll go to Tools and then click on Stock Selector. So let's type in Apple and then click Check Stock. We'll start calculating the point and figure charts and the technical attributes. So let's go down to the point and figure chart. Now the market conditions are bad, and let's look at what you want to do is maybe look at the next sell signal or the bullish resistance line if your stock is in a positive trend, which it should be if you're investing in it. And let's say the market conditions are bad like they are now, and you have Apple. Well, let's say, do we want to sell it right away? I don't know, we can probably hold on to it and see if it does go up for a while and continue to increase our investments until they turn negative, which would be a sell signal. So let's look at, since we're talking about sell signals, we're only worried about the columns of O's. So let's look at the O's and look at the next sell signal. Now it looks like these previous two columns of O's have gotten to 184, all the way down to 184. And that's going to set up for another column of O's at 184, and if it violates that and goes down to 182, that is going to be the sell signal. And that's going to actually be a triple bottom sell signal, and that's even more, it's a stronger signal than just a double bottom. So that's you can count on the price most likely to drop. If it hits 182, it's going to drop significantly after that. So what you'd want to do is, if you owned Apple, let's set a sell signal at 182, or a stop limit sell order. So whatever stocks or options you own, let's just sell out of them if the stock ever hits 182, and you can automatically set that up with a stop limit or a stop loss order. So now, what can we do in good market conditions? So let's say that the market conditions switch to good, and on our stock selector page we display the current market conditions at the top of the page. So let's say they are good, and if you click on these descriptions or the chart, it'll take you to our YP Investors strategy for that market condition. So if you're a member, you can get all these added benefits and help you figure out what strategy you want to use in each market condition. So right now that's the bad strategy, market condition, or the bad market condition strategy. So let's go back. Let's say the market conditions are good and you want to buy into Apple. Well, let's look. The next buy signal would be, we're looking at the columns of X's now for buy signals, would be at 216. So maybe if it hits that, then you want to start buying into it. And you can buy in, once it hits 216, if say you wanted to buy 100 shares, you could maybe buy 50 shares at that point and then wait if it drops down a little bit and then buy the rest of your shares just to hedge your initial investment. But you'd want to wait till a buy signal, because even in good market conditions, some stocks can go down. Just as in bad, they're not all guaranteed to go up or down. So if it's good market conditions, Apple could still end up hitting this sell signal at 182 and go way down and turn negative on you. So just because it's a good or a bad market conditions doesn't mean you should just start buying or selling everything right away. And one of the great benefits of being a member of YP Investors is we automatically send out all of our members the market condition changes. So if tomorrow the market condition did change back to good, all our YP members would automatically have an email update that the market conditions have changed, so they can be ready to switch up their orders or stop putting orders in for selling stock or getting orders in for buying stock. So that's a great benefit to being a member. And how often do these market conditions change? These market conditions, it varies year to year, but sometimes a year can be in one condition the whole year. It could be bad the whole year, it could be good the whole year. And some years, typically it's about 5 to 6 changes a year, so about every 2 to 3 months. And this year in 2019, the market condition was bad right away, and then in late January it switched to good. And since then we've had a rise in prices of the general market all the way up until just recently, last week, about the 13th of May, and that's when we got the indication that the market conditions switched to bad. But this last week we had stocks had continued to rise up and bounce back from their recent loss. So that's an example of why, just because the market conditions switch doesn't mean you just sell out right away. It means you prepare yourself, use the YP Investors tools to set up stop losses or stop limit orders to sell out of stock when it does hit the sell signal. But you might as well hold it and keep getting more and more gains from it as long as you can. So our YP Investors quick tip today is to have a strategy for every market condition. And now, why is it important to know the market conditions? It's so you can have a strategy. So when the market conditions are bad, you want to have a defensive strategy. And when the market conditions are good, you want to have an offensive strategy. So right now they're bad, so if you're a member or if you're an investor, you should be setting stop loss or stop limits on sell signals, or on parts where it's on stocks where it's going to violate the bearish or bullish resistance line. So for example, if this stock was at this column of O's here at 144, I would set a sell signal at 138, because then, if it went below that resistance line, it's now in a negative trend. In a negative trend, or a sell signal in a bad market condition, is something that you want to be out of, because that's indicating the stock is going to go down. And then likewise, if it's good market conditions, let's be on the offensive. Let's have our offensive strategy out there. We want to be buying into stocks. So let's not just blindly buy into Apple at this price, because it could easily go down to 182, and then that's a sell signal, and then it would probably go down even more, even though the market conditions are good. So let's have an offensive strategy and look for the buy signal at 216 and then buy into it. And this is why you'd want to have a collection of stocks to keep monitoring and then buy into them at the appropriate time. So we hope you enjoyed this YP Investors Quick Tips episode today. And if you're not a member, we'd love to have you sign up for a free trial at ypinvestors.com. Thanks for joining us.